Picture yourself opening your tax return, seeing a bigger bill than you expected, and having no idea why. There is a quiet line item on a lot of Australian tax bills that almost nobody talks about. It is called the Medicare Levy Surcharge. If you earn over a certain amount and you do not have the right private health cover, you could be paying it right now. For a single on $160,000 with no hospital cover, that is an extra $2,400 a year, gone on top of the normal Medicare levy. That's ATO's 2025 to 26 figures. By the end of this, you will know exactly how to check if it is hitting you and how to stop it. Here is the number that matters to you. The Medicare levy surcharge can be 1%. 1.25%, or as high as 1.5% of your income, according to the ATO's 2025 to 26 rates. That is on top of the standard 2% Medicare levy everyone pays, so if you cross the thresholds without cover, your effective health-related tax jumps to as much as 3.5% of what you earn. And if you haven't checked this before, that's genuinely not a failure. Most people are never told this line item exists, let alone how to avoid it. The good news is, it is completely fixable. Let me show you what this really costs. Because it is not pocket change and the number depends on where you sit. If you're on the lower end of the firing line, say a single on $120,000, you're looking at around $1,500 a year. If you're in the middle, a single on $150,000 pays roughly $1,875. And if you're on the higher end, say $180,000, that's 1.5%. which is $2,700 in a single year, all per ATO's 20 and 25 to 26 figures. Now stretch any of those across a career and you can easily be handing over $70,000 to $80,000 for receiving nothing in return. But here's the part most people miss, and it's the first thing we check next. Your first move is to find out whether you are even in the firing line. Log into MyGov, open ATO online, and pull up your latest notice of assessment. Note your taxable income to start with. Then, and this is the step that trips people up, you need to add the extras the ATO uses to calculate what it calls income for MLS purposes. Let me show you exactly what those extras are. Here's the trap that catches so many people, and it's the one you most need to know. The ATO does not use your salary for this. It uses income for MLS purposes, which is your taxable income plus reportable fringe benefits, total net investment losses, and some reportable super contribution. That's straight from ATO's 2025 to 26 rules. So if you think your salary of $145,000 keeps you safe, a $5,000 bonus can quietly push you over the line. Use the ATO's question M2 instructions to add it all up properly. Now, here's where it gets genuinely interesting. Matching that number to your tier. Now match your number to the brackets. If you're a single in 2025, 26, $101,000 or less means zero surcharge, you're in the clear. Between $101,000 and $118,000, it's 1%. Between $118,000 and $158,000, 1.25%. And above $158,000, you're paying the full 1.5%, all per ATO 2025 to 26. If you have a family, the base threshold is $202,000 and $2,000 combined, rising by $1,500 per dependent child after the first. Find your band, that is your rate. Your second move is to confirm whether the health insurance you already have actually saves you anything, because this is where a lot of people get blindsided. Log into your health insurer's portal and download your policy certificate. The single most important thing to check is whether it includes hospital cover, not just extras like dental and physio. If you've been paying premiums assuming you're covered, this one check might genuinely surprise you. Now, I want to be upfront with you, because this is the honest catch most people never hear. Even with hospital cover, the excess matters. To qualify for the exemption, your policy excess must be no more than $750 for a single or $1,500 for a couple or family per ATO 21 to 25 to 26. And you need to hold that eligible cover for the entire income year, not just part of it. So if your excess is higher than the limit, or your policy is extras only, you are still on the hook for the full surcharge despite paying premiums. It's not a one-click fix. If yours does not qualify, call your insurer and ask directly for an MLS-compliant hospital product. Your third move is the one that actually saves you money. Take your rate from the first step and multiply it by your income for MLS purposes. Write down that dollar figure because that is your annual surcharge, the money you're handing over right now. Then jump onto any registered health fund's website and get a quote for basic, MLS-compliant hospital cover with an excess under the limit. And here's the number that actually matters. Let me show you with a real example next. Let me walk you through a real example so you can see yourself in it. Meet Alex, 34, an IT project manager in Sydney on $145,000 salary plus a $5,000 bonus. That bonus pushes income for MLS to $150,000, landing Alex in Tier 2 at 1.25%. The surcharge is $1,875 a year per ATO 2025 to 26. And here's the kicker. Alex already pays for extras only health cover and assumed they were covered. They weren't. For many people, basic hospital cover costs less than or similar to that surcharge, so you can swap dead tax for an actual benefit. Now compare the two numbers side by side. If the annual premium for compliant hospital cover is less than or close to your surcharge, the choice is usually obvious. Instead of paying 1 to 1.5% of your income to the ATO for nothing, you redirect a similar amount to a policy that actually gives you hospital cover. You avoid the surcharge and you get a real benefit out the other side. Just make sure the policy is in place across the full year so your exemption holds. And this is where most people make the mistake that costs them the most, which we'll cover in a moment. Here's why getting this right matters so much to you. That small annual hit compounds into something huge over time. If Alex stays on roughly today's path, never fixes the cover, and income grows around 3% a year, the surcharge over a 33-year career adds up to roughly $74,000 in today's dollars, based on ATO's published rates. I'll be honest, that's a stylist estimate, and your real outcome will vary, but the direction is unmistakable. A tax you barely notice each year quietly drains tens of thousands over a lifetime, and none of it buys you anything. Before we recap, let me flag the two mistakes that cost people the most, so you can sidestep both. First, assuming extras only cover counts. It does not. You can pay for dental and physio all year and still cop the full surcharge because the ATO only recognizes appropriate hospital cover. Second, judging your tier by your salary. Bonuses, salary sacrifice, investment losses, and reportable super all feed into income for MLS purposes. Remember, Alex thought $145,000 kept them in Tier 1. The bonus bumped them to Tier 2. A difference of $775 in extra tax in a single year per AT 2025 to 26. Let me run it back fast so you have the whole thing clear. Step 1. Log into MyGov. Work out your income for MLS purposes, including bonuses and reportable items, and find your tier. Step 2. Download your health policy and confirm it includes hospital cover with an excess no higher than $750 for singles or $1,500 for families. Step 3. Calculate your surcharge in dollars and compare it to a basic compliant cover quote. And never forget the two traps. Extras only does not count, and your salary is not your MLS income. If you've made it this far, you now know something most people paying this tax have no idea about. Your next step is simple. Take 30 minutes this week to run those 3 checks, and you might find you can fix this before the year ends and stop paying a tax for absolutely nothing. If you want to go deeper, the natural next thing to understand is how income for tax purposes is really calculated, so the ATO never catches you off guard again. That's exactly what we cover next. I'm Sophie. I'll see you there.